being able to really drill down on these things, not only allows you to focus your marketing efforts to say, okay, I'm looking for, yada, yada, yada. And then you can really get a niche going in that space. You could have a real thriving business that is quite large that still qualifies for nationwide small commercial.
Yes, 100%. They write a bunch of the Dunkin' Donut slash Baskin Robbins franchises in Texas. Okay. So we love a franchise. There's actually a button in ClearQuote that asks if it is a franchise, and I believe you do get a premium discount.
This episode of The Insurance Dream is brought to you by
Insurance Professionals is the aggregator unlike any other. You own your book of business 100%. You pay no sign-up fees, monthly fees, or exit fees. You have direct logins to the nation's top insurance companies, and you have the ability to quote and bind directly on the carrier's website. Insurance Professionals was built for insurance agents by insurance agents. Come see what makes us America's favorite aggregator at www.becomeaninsurancepro.com. Again, that's www.becomeaninsurancepro.com.
All right, I'm here with Cinnamon York. She is the commercial lines representative for Nationwide. Nationwide, a couple years ago, was it, Cinnamon, went to be available to independent agents, allowed their agents to go independent and work with a whole bunch of different carriers. And from what I'm understanding, Nationwide is still writing the same amount of business, maybe even more, but the agents really have benefited from this. And then obviously the independent agents that now have access to Nationwide products, they seem real happy too. So thank you for being with us today. Tell me a little bit about, because we'll go into how Insurance Professionals has partnered with Nationwide and given agents access to, try out Nationwide products and see if it's a good fit for their agency. But tell me about your experience with Nationwide pre-independent and then post-independence and just kind of, some of the markets that you guys have consistently been strong with throughout, that time.
Yeah. So I would say we obviously in the past had an independent agency channel, and then we also had our exclusive agency channel. I would say the exclusive agent model was something that we saw more on the East Coast of the US. It didn't affect us too much on the West Coast. But yeah, a few years ago, we notified our agents that we were going to move to a completely independent channel. We gave our exclusive agents the time to either go independent, or we would essentially purchase our policies back from them. Some people were not happy about the change, but it really gave a lot of our exclusive agents the opportunities to go out there and sell different lines of business, classes of business, really open it up for them. I have not really heard any negative feedback about it. A lot of our exclusive agencies actually got absorbed into larger agencies, took over like small commercial units, focused more on the personal lines or like our private client space. And like you mentioned, it had no effect on our premiums. And to be honest with you, from a small commercial point of view, 2020, even with everything that was happening with COVID and small business, we had our best small commercial year in 2020, and then we beat that premium wise in 2021, and the trajectory is looking like we're going to have another great year in 2022. So personally, awesome. I don't think there were too many negative effects from it.
Yeah, it sounds like a whole lot of winners and not too many people that lost anything. So tell me about the Nationwide small commercial appetite. So number one, what does Nationwide define as small commercial? And then what type of appetites have you seen, consistently, like just long-term success in?
Yeah. So our small commercial market definition is anything less than $100,000 in premium that will segment small. And then we have a few different caveats to that. So it's got to be less than 20 million in TIV, so building and BPP,
sure.
Less than $20 million in sales on the GL exposures, less than 20 power units, on the commercial side. And then for the work comp, less than 50 employees. And then we also have
That's
one.
still a pretty big business, in my opinion. I mean, so that's why I asked, because like small commercial, you know, when I think of a small business, I think of like your owner operated mom and pop. But, you know, the nationwide, I mean, you could have like a real big thriving enterprise and still, I mean, obviously you guys still take those mom and pop operations, right? But you could have a real thriving business that is quite large that still qualifies for nationwide small commercial.
Yes, 100%. I would say, just like you were saying, I actually kind of define small business. I call it micro business, which is going to be like your mom and pop, minimum premium type of policy, everything that fits on a BOP. But our small commercial, we have larger schedules of locations, larger fleets that we can fit onto our small commercial definition. And to be honest with you,
how many autos?
To less than 20 power units. So
okay.
like, for example, I was helping an agent this week. They had 24 vehicles, but 7 of them were trailers. So that was still segmenting to our small commercial. We're honestly evaluating moving up market in our definition as well. So we don't have that completely ironed out yet, whether we go up to like $250,000 in premium, if we move some of our TIV values up, because we definitely want to be a player in that space. And as we become more automated in our system, it is so easy to quote some of those larger accounts, especially the BOP accounts. Even on those larger ones, you can put it in the system. It's going to take you like 15 minutes and you've got a quote. And in most opportunities, a bindable quote without even having to go to underwriting.
Wow. That's really cool.
So,
So let's talk appetite. And, you know, going to minimum premium real quick, step it back. I ran a quote for a friend of mine who recently moved to Montana, and he called me up and said, hey, you know, and I mean, typically in insurance professionals, we don't really do any quotes. But I ran a quote for him just because he's my friend. And, you know, we have our agents that, you know, utilize the market access, but it's like $624 for the year or something like that for a handyman operation. I mean, just cannot be beat. That was low. And then he was like, well, you know, I'm thinking about either doing handyman, like just repair work, or I'm thinking about, you know, doing like new construction type stuff. So we ran a quote for that. I think it was like $7,500 or something like that, which was obviously not with Nationwide, but you know, the handyman class code, that's a lot of flexibility in there. You know, and like I said, he looked at the price. He's like, wow.
Yeah, I would definitely say, just specific to that class code, if someone truly is a handyman, yes, the premium on that is amazing. I've seen some of our minimum premiums on some classes anywhere from like $550, $650, just depending on what they are. And I would say we are really, really hitting on anything that can be put on a BOP. And I know if you talk to any of our competitors on a national space, we all want that same Main Street BOP business. What we really do good on specifically is going to be restaurants. And that could be anywhere from fast food all the way up to fine dining. We have class codes to encompass like an entire array of any sort of food service type operation. The only things we try to stay away from are anything 24 hours, liquor receipts over 50%. And
50%, so that's pretty generous though.
We did recently up that. It used to be at about 30% for just a normal sit down restaurant. But we evaluated and we decided we can move up in that space a little bit more and kind of entertain some more of that business, obviously, as long as controls are in place and whatnot. So restaurants we do really good on. I would say we're averaging probably around a 25 to a 30% bind rate on those classes. Another great one countrywide that we're hitting on is going to be auto repair. So anywhere from auto body shops to tire dealers, quick lube places, just your normal repair shop. We do great on those as well. We're averaging, I would say, probably around a 25% bind rate on those. And it could be anywhere from a franchise to a single guy operation down the street. We love those operations, and that goes on a BOP as well. So we provide garage keepers, and we do provide specific enhancement endorsements to each of our BOP products. So we have a food service BOP, an auto repair BOP, service, retail, And then I believe we also have one for like wholesale / manufacturing distribution as well. So those are some of our, and we do have an office spot as well. And then some of the other ones we hit on, retail, we do really good on. And then what we've really been pushing the last, I would say 2 years is going to be artisan contractors.
Okay.
So any of those small contractors that have less than $750,000 in payroll. So anywhere from interior carpentry to furniture and fixture installation, landscapers and lawn care, we do amazing on. We kind of moved into the space for garage door installation and repair guys, painting, HVAC, pretty much anyone we would have come to our house and do some work on it. The only thing we stay away from in the contractor space is going to be anything new residential, just because the construction defect on that is still
That's a
too
huge
hard.
exposure. That's a good way to bring all your premiums up, right?
Yes.
Having to spread that loss ratio over all those different lines.
Exactly.
Let the people that do that. So
I always tell your guys when they call in and ask me appetite questions, I will be forthcoming. I was like, that sounds like that would be amazing in the E&S market. And there's probably a guy that's doing it amazing. So
yeah. Oh, for sure. Yeah. There's lots of them that do. And then of course you got, coverage form concerns and stuff like that, depending on the market you put that with. But that's one of the nice things about Nationwide, because, I've been doing commercial insurance long enough to know that you got to be careful on that, right? Is your guys' coverage form, it seems to be very generous. I mean, you've got, your standard, like, no airport work, no high-rise work, no, a lot of times mixed use is something that seems like maybe is not really welcomed in the appetite, which is understandable too. You get too many things going on at one time, you're increasing the likelihood of a claim, which obviously increases the rates. But I mean, tell me about, like, let's talk, contractors or restaurants or something like that for a minute. Tell me about the exclusions that are kind of standard in the Nationwide policy. Like what people would not make a good fit for those markets.
So I would say, starting with contractors, since we were just talking about them, and the new residential, we do put an exclusion of residential construction endorsement on our policy.
And that's meant for the new residential construction.
Well, yes. So everyone gets a little scared because the title of it is exclusion of residential construction. So people are like, oh my gosh, we can't even write a contractor who steps on a residential house. But that is specific to design, development, site prep, construction, marketing, or sales of single family or multifamily. So we do consider apartments to be residential, condos, but the exclusion does not apply to repair or service work. And it
maybe even like additions, probably, right? Like if I'm putting an addition on a house and I'm a remodel contractor, is that that's
totally fine. So we don't exclude repair, service, or renovation or remodel.
Awesome.
Remodeling. So as long as it's already standing, we just don't want the new stuff from like the foundation up.
You can still build a good book just off of that, though, because I mean, so we wrote contractors. That was what we specialized in, was contractors in our last life. And I can tell you, of the people we had on the books, I mean, easily 70% of them fell into the category that you just described as covered.
Yeah, I would say we are. So my group, the small commercial territory managers, we started in January of 2020. And even to this day, reaching out to some agents, they're just like, well, we never really thought of Nationwide on the contractor space. Yeah. So even over the past 2 years, we've written so much new contractor business. It's amazing. I would say we're averaging about, and this is across the country, we're averaging about we've actually got up to 5, anywhere between like 3.5 and $5 million in new contractor premium a month.
Wow.
In 2022. And that is across the country and all the states we write in. That's all lines of business. Like, we want everything. We don't have a contractor BOP yet, but we do just put it on a package.
Sure.
So we want the GL, the property, the inland marine, the auto. We even want the work comp on most of the contractors. And then obviously umbrella. So everything.
Well, that would have been a game changer for us if we had access to Nationwide. Of course, back in those days, that was not possible. But so with insurance professionals, the nice thing is agents can come in, they can try it out. There's, not like the standard, premium requirements or, things like that. I mean, you'd obviously want to be right in business, right? Because otherwise it doesn't make sense to have the appointment. But just seeing if it's something that fits within the wheelhouse of what your agency does makes it a really easy trial run, and then grow that book of business. And per the contract, you can get appointed directly. So just makes sense on a lot of levels. Let's talk restaurants. What
Yes.
type of exclusions? So, I mean, we got the 50% alcohol sales, which is extremely generous. I know a lot of the carriers that Insurance Professionals works with, you're looking at like 25%. They don't want any more than 25% liquor sales. So that's, to me, I mean, if you're doing over 50% like liquor sales, you're probably a bar. You're
Yes.
not really a restaurant anymore. And so, that's generous. Tell us about some of the other like exclusions on the policy or kind of parameters of eligible business.
Yeah, so there really aren't any exclusions that stick out in my head that we put on, but probably what would be better is just what we don't want in the restaurant space.
Yeah.
So like you were saying, I always tell my agents, we want a restaurant that serves alcohol, not a bar that serves food. So that's where that 50% goes into. So obviously we don't want bars, taverns, pubs. We really like to stay away from college type locations if it's near a college.
Also
and
understandable.
they're like catering to college students, advertising. We don't like tableside cooking or operations where the patrons cook their own food. Any sort of solid fuel cooking inside the premises or even right next to the premises. We get a lot of barbecue restaurant submissions. And if they're like smoking overnight unattended or the smoker is right next to the building, we're going to pass on those for the most of those risks. We don't want non-owned auto coverage for restaurants where the employees use their own vehicles for food delivery. But there are some caveats to that as well. We have opened up our higher non-owned exposure a little bit in the restaurant space. So I always say run it by us and ask us first. Yeah. We don't like restaurants that are being operated from a converted dwelling. Obviously, there's like building guidelines that we're afraid haven't been upgraded to fully be integrated for a restaurant. No buffets, which I feel like COVID has kind of taken care of that for us.
Yeah. Not as many as there used to be.
Not as many as there used to be. We don't like those. There's obviously reasons why. No 24-hour operations, so like Denny's or IHOPs.
Sure.
And we don't want seasonal restaurants that are open less than 8 months of the year. Definitely wildfire is going to be a hot button for us. So we definitely don't want any risks located in like a PC9 or a PC10. And there can't be habitational occupancies in the same building. So I know recently we had a restaurant that was on the ground floor of a hotel.
Yeah.
So we passed on that one. And then so this one always confuses everybody. So we can do caterers, but we don't want restaurants that have 10% or more catering receipts.
Okay.
So if it's a specific caterer, that's all they do, fine. But we just got to look at that restaurant that does a little bit more catering off-site. And then we do add on our food service program. Like I mentioned, we have an enhancement or endorsement that is specific to the class of business, and we attach it. So we do, to qualify to be on a food service BOP, you just have to have less than 20 million in TIV. You can have up to 25 locations. Wow. And
it's a franchise.
That's pretty much a franchise.
Right.
I mean, to be honest with you, it's not me, another underwriter / territory manager. They write a bunch of the Dunkin' Donut / Baskin Robbins franchises in Texas. Okay. So we love a franchise. There's actually a button in Clear Quote that asks if it is a franchise, and I believe you do get a premium discount. So yeah.
Established procedures, lower claim ratios.
Exactly. We love it because probably somebody that is risk management focused at the franchise is dictating procedures and controls, whereas like maybe the mom and pop breakfast place doesn't have that type of control in place. So we love those. And then the food service plus endorsement that we attach, it includes some additional coverages on top of what we just normally give in our BOP. So there's like some credit card forgery coverage. credit card slip theft, disappearance or destruction, cleanup expenses, if there's an accidental discharge from the automatic extinguishing systems, then lost income that would be associated with a discharge. We give some food contamination, loss of income coverage, some additional advertising expense, and then spoilage from a power outage, because I know that that's a big one for restaurants as well.
That's huge.
So yeah, and we always just say, tell your clients we throw in this extra stuff. I mean, I'm sure a lot of people in the standard line world are doing it, but that's just one thing you guys have in your tool belt to help sell those policies.
Sure. Well, and so, I mean, you look at all that and it's like, again, getting back to the focus of like, why do we have all those exclusions or why do we have all those limitations? It's to keep the premium down, because the only 2 restaurant claims that I know of from, I mean, it's like one thing reading the news, right? But like restaurants that I actually saw the claim. So there was one of them that was a barbecue smokehouse and it went up in flames. There was another one that was a one of those Japanese barbecue style places where they like squirt the stuff and big flames go up. It's cool, right? Like I've gone to them.
Yes.
Nervously though, because before I ever went to him was when I heard about the claim, and there was a guy sitting across the table and they squirted it. This splashed up on him and caught him on fire. Over $1 million claim. Clearly not good for everybody else, that owns a restaurant and is insured by whatever company paid that claim, because that's when everybody's rates go up, right? And so, being able to really drill down on these things, not only allows you to focus your marketing efforts to say, okay, I'm looking for, yada, yada, yada. And then you can really get a niche going in that space. And let's talk like longevity, because so it sounds like contractors might be kind of more recent. How long has that been? And then how long have you guys been, really kind of dominant in the restaurant space when you have the opportunity to quote?
Yeah, so I'll start with the restaurant. And I actually have a little bit of unique insight into this because one of my local Phoenix, Arizona agents, he is a hospitality agent. That's what he does. He writes restaurants, bars, anything in the hospitality space. So I get a lot of intel from him. And he said maybe 5 years ago, he was hitting hard and heavy. Anything he quoted with us that fit our appetite, he won it every single time. Wow. Premium was always the best. He said about 2 years ago, he noticed that our rates weren't where they used to be. But the beginning of this year, he started hitting hard and heavy again. So I don't know if it was just some sort of cycle.
Everybody else raised their rates.
Right, exactly. We don't have a horrible loss ratio in the restaurant space. So I don't see any sort of changes to our rates across the country at this point. Obviously, the main thing we look at is going to be the liquor. If we start getting inundated with liquor liability claims, there might be some adjustment. But as of right now, I think that's going to continue through the rest of 2022. And we do have meetings with our products guys on a monthly basis where they're asking us, tell us what you guys are getting feedback in the field. What are people telling you? Who's our competitor? And restaurant is definitely one that we want to keep increasing the premium with us. I'm going to pull it up and
volume,
see. Yeah, the premium volume. So restaurants, we're probably averaging about 2.9 and $3.8 million a month in new business premium across the country.
Wow.
And that is anywhere from fast food all the way up to the fine dining. For some reason, my agents are hitting on donut shops really good right now in that space. We recently opened up 4 new class codes for fast casual restaurants, and the premium on those is amazing. So fast casual is just going to be, I always say it's like a Chipotle or a Payway, a Panera. So order at the counter, you sit down, the decor is a little bit nicer than like a McDonald's. The food's going to be advertised as healthier than a fast food place. But like I said, the premium on those is really, really competitive. So there's 4 class codes in that space, one for limited cooking and one for full cooking. And limited cooking is just going to be anything that doesn't create grease vapors. And then we also have associated LRO class codes in that space as well. So that's kind of amazing.
Yeah.
So restaurants, let's keep doing it.
Yeah.
I haven't heard any sort of change we're going to be making anytime soon in that space. And then for as for contractors, I think that is where we're spending a lot of our time and energy. Like I mentioned, we're working on a contractor BOP because we know we're up against some of those. I know Chubb has one that is very competitive that I was trying to steal a landscaper from them a couple weeks ago. We were close, but weren't able to get there. But yeah, so we're spending money on creating a BOP for those really small contractors. But like I said, we are continually evaluating the class codes in that space. So we've done 12. We're kind of working through the rest of them. We're always evaluating the auto premium because that is definitely where we lose some of those accounts. But I always tell my producers, my agents, we're looking at the accounts holistically at this point. So even though we may be max credited out on the auto, can we bring down the GL premium? Can we bring down the work comp premium? Anything, because I don't think your clients care where the premium is being placed. They just like to see that bottom line number. So let's look at the account as a whole and get it as cheap as possible.
For sure. Well, and I think this will be helpful because we've been on the podcast historically. We talked about, niches and the power of niche marketing and stuff like that. And to now have two different markets that you could choose from, really drilled into, the nationwide and then nationwide, the commission rates with nationwide are, competitive with is anybody in the industry, right? Like there's some of the carriers out there that we won't name right now because we're nice, that really kind of discount down the commissions that they pay agents. So you guys, you're 15 on pretty much everything. What's your work comp rate? And is there anything that's not 15?
So we are 15 across the board. The only thing I do warn you guys is we can write monoline auto on a very limited basis.
Yeah, it's you and everybody else in the country though, right?
We're all doing it. I know. Auto's hard. Auto's very hard. But we do monoline auto is 15% at new, but it drops to 12 at renewal. So that's that.
Still better than a lot of them.
Still better than a lot of them, but I always tell you guys, especially if it's a contractor where maybe we won't do the liability lines on that, throw some PPP on there, throw some tools on there just to make it a non-monoline account. And then you look like the hero because you're like, look, we're going to cover all of your exposures. Let's cover your tools, your equipment. Let's get everything on the books.
Yeah.
And then,
and on that note, real quick, just so again, going back to my contractor days, I got a phone call from somebody one time that he was so excited. He was like, I want a quote. And I was like, all right, we'll take down your information. So I got talking to this guy and he said, I was a contractor 6 years ago and my van got broken into and all of my tools got stolen and I had no insurance on it. And so I had to go to work for another construction company for 6 years to save my money to rebuy my tools. So I want quote on general liability and I want a quote on my tools. And I thought, wow, that's so, because, as an agent, like a lot of people look like, you're peddling just premium, right? You're like, oh yeah, you got to buy this and you got to buy this and you got to buy this. But it's like, there's real life consequences for not having those coverages in place for your insureds. And it's like 6 years. I mean, that's a huge chunk of somebody's working life, right? To step down from what they want to do and go do something they really don't want to do to get back to that place that they would have been at had they had a, $50 a month, $40 a month policy or whatever.
Right. And I mean, our filed inland marine rates, obviously it varies by state. I just pulled up Arizona. I mean, that, like you're saying, it could have been $500 a year to cover thousands of dollars worth of tools. And then this guy would still be working for himself. And we even have some enhancement endorsements that attach to the inland marine that give you even some additional coverages that you might not even think you need. So, and sometimes they cover your employees' tools, small tools. Obviously the leased and rented stuff comes into play if you need coverage for that. So yeah, and I always tell my agencies, our quoting in our clear quote system is so easy. Quote everything. It's literally just clicking a button, typing in some exposures, provide your clients with the quote. And you know what? If they don't want it, it's literally the matter of just unchecking a box and then moving on. So
yeah. Well, Yeah. So totally makes
Yeah.
sense.
No, it's great. So yeah, the work comp, obviously the commission is a little bit different on that. So I will do all states except California and Texas because they like to be a little more difficult. Actually, you know what? It's barely different. But so premium less than 25K is 15%. Premium 25K to 100K is 9%. And then anything over 100K is 7%. And then at renewal, the only thing that really changes, it goes down to 987. So, but I mean, that 15% at new business for those small work comp, like put those on the books
For sure.
all day long. And I would tell people, so obviously on the work comp side, we're dealing with some states that have mutuals. The big one comes to mind is Texas Mutual, who writes all the work comp in Texas. And people always want to talk, well, they got dividends, they pay dividends. And I always say sometimes if your client doesn't care about dividends, if they're never going to get to that dividend point, if they're so small, it doesn't matter. Let's get your clients the best upfront pricing and you're good to go. So keep that in mind. And we're hitting on some work comp in those mutual states. So
Cool.
We are doing something.
It's worth a quote always, right?
I would say that's worth a quote. If I have your payroll exposures and you are asking me to help you quote, we're doing a work comp quote.
Yeah, absolutely. Let's talk footprint because Insurance Professionals operates in, all of the lower 48. We've got a little bit in Alaska, but not really much. We don't operate in Hawaii or Puerto Rico, Guam, but everywhere else we have agents. So let's overlay that with Nationwide's footprint because I know that there's some states that you're not writing in right now, and then I think one or two that you're not writing in completely, right? Is that so? What does the nationwide footprint map look like for Nationwide?
So we do not write. We are not filed in Alaska, Hawaii, Oklahoma, or Louisiana. So if any of your agents were even to go into the system, those buttons are grayed out. So you would not even be able to pick those states to quote in.
Sure.
I will tell everyone that we are currently transitioning from our old legacy quoting platform to our new quoting platform, which is going to be amazing when it's all live. Slowly rolling out. So there may be some weird state rules that are rolling over. Like I know there's something specific to New Jersey where if you have something on a package, you can't quote it right now because you'd have to write it through this other platform, but you can write BOPs. Same with in Florida. We used to have some weird domicile rules, but in the new system, those rules are gone. So if you've got an old legacy quote you're working on, there may be some weird stuff there. And again, I think it's New York, New Jersey, and Florida that are the main weird licensing stuff, but we're almost to the point where that won't matter anyway. So
perfect. And what kind of time frame do we got for that? Do you know?
So
question of the century.
I know, right? Honestly, most of our states are already rolling out. Like on Arizona, we're completely, all lines of business are completely live in the new system. So there aren't too many issues there. The ones that are kind of California, like don't even ask me about that the DOI in California is making things a little more challenging. But if I go through our states, we're going out to like maybe mid 2023 to be completely live in the new system. But a lot of our states are already live and quoting. Yeah, it looks like mid 2023 is where some of these guys are.
Cool. And then last question.
Yeah.
What's in the tank behind you?
I know. Everyone always asks that. I don't know if he's out or not. That is Mr. Turtle.
Turtle.
He's a box turtle. My college boyfriend got him for me in 1998.
Okay. So
he's been around.
Yeah, I bet.
Time.
Yeah, that's cool. So yeah, we have a sulcata tortoise.
Oh, okay.
Yeah, so it's growing like a weed. Box turtles stay a little smaller, is that right?
Yeah, he's like this big. He's obviously his aquarium's pretty little. So yeah.
Ours was the size of like a 50-cent piece when we got him. He just feed.
Oh, nice.
Actually, a neighbor girl came and dropped him off at our house, which is whatever, it's fine. But then now he's like,
wow.
He's like he's
cool.
big, and he's not even full grown. But
Oh, wow.
yeah, he's
Nice.
gonna. I think they get to be like 150 pounds or something like that. So it's like you got to go get like some kind of strap and lift him up into the back of a pickup truck to the vet if you ever got to go. So that's interesting. Well, cool. Well, thank you so much, Cinnamon. We really appreciate it. I think it's given agents some good insight. Agents that are signed up, you've got the credentials. Get in there and start quoting. Check out these appetites that we talked about. Agents that don't have credentials, you can go to becomeinsurancepro.com, click on the nationwide button, and we will get you running. We appreciate your time. Thank you so much.
Thank you.